Hey everyone, welcome to Breakout Wednesday for September 23rd, 2:20. It's currently about 6 p.m. Sydney time. Now, first of all, remember this is never financial advice. This is simply a video blog on how one trader sees the market, and everyone needs to take responsibility for their own decisions. Okay, moving on. Now, just some overall stuff. We've had obviously a little bit of pullback. We've bounced in the last couple of days. Here's a chart of the Nasdaq. In Australia, we've had the market rolled over a little bit, but it's still very much in this sideways range here. So, looking at the bigger picture, the bank's incredibly weak. A lot of the smaller stocks are still doing pretty well, but the banks are incredibly weak at the moment. So, it's amazing how strong many Asian stocks are. Alibaba, for example, one of the biggest ones, pulled back to its 50-day line, not quite even, and then bounced off it. And a lot of the biggest companies, big leading brands have fallen down to around their 50, 150 to 200 day moving average, and a lot of them will get picked up there by people looking to get bargains. Lulu happened. It's happened to a lot of other leading companies in America. In Australia, there's a few examples. Coles, for example, retraced down to its 150-day moving average, and it's had a little bounce off that. Who knows if it'll keep going from there, but it's certainly an area where when you have companies, stocks in long-term uptrends, this 200-day, 150-day line area, region around there, it kind of acts like this dynamic support. So often it's uncanny. And so that's a bit of a look over overall things. There's a lot happening at the moment, obviously, in the world. JobKeeper's about to, get toned back a little bit. In Australia, certainly a lot of people currently on JobKeeper who probably shouldn't be, in terms of, people, I have a few friends who are earning way more than they used to be earning. So some of that's going to get cut back down. There's going to be less money to spend. But rates, there's also obviously talks of rates falling a lot lower. People love shoving money into the stock market when rates are incredibly low. So there's a lot to think about. US election coming up. It's all way above my head, all that fundamental stuff. I just really concentrate on price action, and price action alone. And that will just dictate what I do, as always, right? So let's just quickly roll through some stocks. A couple open ones quickly. I've got a whole list of new bases setting up that I'm going to quickly just get through. So Fortescue, I was stopped out last week. I said I had to stop below the support line, stopped out on open the next day. Done and dusted. Good trade there. Pretty happy with that guy, obviously. Quickly was going to touch before I did that on exits. I had a old colleague slash mate messaged me this week about let's just get that out of the way, about how quickly I get out of stocks when they kind of break out, then dawdle sideways. My answer to that is actually usually pretty quickly. Sometimes it works out well, sometimes not. MRZ was a stock I was in when it broke out here, and I got out, I think, this day maybe for a break even / a tiny win on that. And then obviously the rest is history. This thing just gapped up and went for it and would have hit my target and then some. And you win some, lose some with it. That was a break even trade pretty much. Whereas in CMM, wasn't really, just cruising sideways, put a really tight stop in, stopped out, and then obviously it crashed back down. So, there's no right way to do it. It's gonna work out well sometimes and not other times. The whole point for me is just to be consistent, just keep doing the same thing. There are obviously exceptions, like CIA. I've given way more room and time than normal. Probably, maybe I'm going to get stung by that on this one, but 99% of my trades I'm consistent. And I need to have a bloody good reason to not be. Okay. Moving on quickly, PYC broke out again, added, and it's just stormed up a bit, so I'm holding that. KAJ broke out, it's dawdled back down. Let's see how it goes over the next week or so. CDA had a breakout, but I didn't jump in that. So they're just a few from last week. A bunch of the others I talked about are still just hovering around. Have still broken out and just kind of cruising sideways or well above their 20-day moving averages or whatever. So there's no point going through those ones because that's pretty self-explanatory. Now, a bunch of new setups happening currently. LIN, yep, I didn't mean to bring that one up. It broke out today, too late. That's life. MX1. Okay, so This is a little healthcare company. It's above all its key moving averages. The 200 days still kind of sloping sideways to down, but it's formed a clear resistance here at 20 cents. So pretty decent setup, a lot of bottom in action. You can draw a source around all that if you want, but fact is we have a tight pattern here, pretty good unbalanced volume. So WMX1 is one I'm watching. VLT, mentioned this last week, it just continues to tighten. The longer it tightens, the better, but this little tight right hand side that's developing here looks good to me. Yeah, anyway, still keen on VLT. ZNC, still basing here. Wild base, let's just hope it bases for another few months if it can. GB, but I've got an order in for that one. GBZ, this is a new one. It's basing sideways, but loose. I mean, this needs longer as far as I'm concerned to base. This is on a weekly chart. But if you can just tighten up a bit, I've certainly added that one to my watch list. Likewise, SES, huge base here. Let's go to weekly data. Weekly data is key. You know, I think so many traders just stare at their daily data, and you know, daily data is good, but weekly data is incredibly good, and especially if you're a swing trader, medium-term trader, long-term trader, whatever, weekly data just gives you such a nice clean picture of the bigger picture. Clean view of the bigger picture is what I meant to say then, all right? So SES, now AVN, okay, this is this is a real estate company, and this needs more time for me to base. I mean, the key moving averages, the 150 and 200 are pointing down. The uptrend's not really that mature, but if it can just if it can tighten up for a longer, I'd say the Bollinger Bands are kind of starting to squeeze, and yeah, they are. So that's a pretty tight base pattern happening there. Certainly added that. I need that for me just to base just another kind of 4 or 5 days. If it can do that, AVN could be a pretty good entry. So a couple more here. BBN, Baby Bunting. Got all these boxes here that just indicate gaps. Frank Watkins talks all the time about gaps, and he's if you're a member of Pro Trader and listen to his talks, you're going to know all about them. And as most people probably know, there's 3 types of gaps: a breakaway gap, a continuation gap, and an exhaustion gap. And these are all breakaway gaps. Okay, breakaway. And so breakaway gaps tend not to be always filled, whereas continuation and exhaustion gaps tend to be filled. And so the fact that this has left 3 gaps behind, I couldn't care less. A signal's a signal, but if it was a stock that's just left a bunch of exhaustion gaps behind it, then I tend to be obviously super careful about those stocks. Okay, Baby Bunting, I'd love it to tighten up longer. If it can just do what VLT's done and just form another tight right hand side here, that would be close to perfection. So I'm going to watch that one carefully. HE8, looks like that might break out. We've had a big increase in volume in the last few days. We have a pretty decent sideways base there. Weekly data looks pretty good too. Energy obviously has been ticking up lately in the commodities. So for those who follow commodities, and so HE8 is a new setup. It's hard. There's a lot of setups still out here despite a overall market going down. We're skewed by the big banks, right? Obviously our index is so heavily weighted on the big banks, and so it's really hard for the All Ords to look good when the banks are not healthy, and so it's just the All Ords. It just doesn't really tell a very good picture on what's happening with the market. Okay, by staring at that All Ords chart, how would you know that Afterpay's done what it's done, right? It's just there's so many. It's like property. There's so many sub markets and mini markets, and it's the same thing, and so there's always stuff going up. Now quickly, a couple more. WGO, this is this stock we talked a lot about when it was back in this big base here. I still have a position on that. I trimmed half, but I still have a position. So this was just we talked about this one back August, a couple of weeks in a row there, and now it's just given a continuation setup. It's nowhere near as good or as safe as this first setup. The first base closer to all the key moving averages, way safer than when stocks start moving away, getting extended from their 200-day moving averages. This stock is far from extended though. If it was up here at like 37 cents, that would be extended. It's still got a ways to go as far as I'm concerned. So WGO, I'm probably just going to add a tiny bit back onto that trade, onto that open trade. And just a couple more before I take off. A2B, I want that to base for longer, but it's forming a super tight base there. Let's see if we can base for another few weeks. And BTH, it's forming a base with absolute blue sky above it. Awesome volume here on the move up. Strong unbalanced volume with a drop off here during this pullback, and it's just forming a really tight little pivot there. So BTH. Now the only real company on the NASDAQ I'm watching at the moment is CBAY. I'm trying to really cut down on my US trades for sleep and family reasons. So CBAY setting up there in a pretty good base. There's been some pretty good biotech healthcare breakouts lately. There's been some takeover stuff in America, which I won't go into, but it kind of like repriced the whole market there, or some stocks anyway. And certainly it's a good sector right now, and that's a pretty good base. Hope everyone's well. Take care. Stay safe. Chat next week. Bye.